What could this all mean for the Fed, and what would another hike mean for financials, a sector that's having a rough couple of weeks? S&P Regional ETF closed out a fifth negative week in 6. Joining us this morning, Thomas Schote, the CEO of KBW, a Stifel company. It's great to have you back at Post 9, Tom.
Good morning, Carl.
What do you think? Can we have a little acceleration in activity and still keep inflation in check?
My sense is that this is going to be a longer-term thing that needs to grind its way out. And that I'm a believer that the Fed is done and we won't get a November bump, and that we'll see a slowing economy over the next 6 to 12 months, and that we don't have a Fed that's thinking about easing until the second half of next year.
Second half.
Correct.
And that would just be because inflation has continued to moderate?
It seems like, yes. I think we'll continue to get to moderate, and we could get a lot of progress even if inflation stays near 3%. And then the Fed will have a chance to pivot then and think about its dual mandate, not its singular mandate.
So you're not worried that inflation's going to linger and be sticky and
that's my
even
sense.
Pop back up again?
Stickier. I think it'll be bouncy, but I think the overall trend is still declining, is my sense, because I think that 5% interest rates are going to have a real bite on the economy, and we're going to find out that the economy is a little bit slower maybe than people think. That's my expectation. 5 to 5.25, that is real, and we're going to start to see more things that hadn't happened in a while happen.
Like negative job prints?
Credit, and the one standout is employment and unemployment, which how good the unemployment rate has been. But if the economy slows and that starts to move, that can have an impact in the economy. And also, something we're doing we've never done before is we're working off the hangover of COVID stimulus. And that may be a little sticky in and of itself.
I mean, this just echoes what we just heard from Chris Gorman, CEO of KeyCorp, who was just on lagged impacts. Also, the fact that there is financial tightening happening, even if the Fed does not continue to raise interest rates.
Real rates are higher.
And also their QT, they're tightening, they're trimming the balance sheet. Are you surprised that hasn't had more of a negative impact? Do you expect it to?
I'm glad it hasn't, but I think that higher rates will have an impact on the economy overall. But look, already a lot of bad news is in the bank stocks.